Mainly, I mean, one of the more important issues that we noticed with the CARES Act too is they now are allowing businesses who claim PPP 1.0, I guess you would say, to also claim the ERC. Whereas in the past, you could not have both programs running at the same time. You couldn't have an employee retention credit as well as get a PPP loan. Now you can.
Hey, well, hello, everybody, and welcome to Pulse of the Parish. I'm David Huff. I'm a board member of the St. Bernard Chamber of Commerce and the owner of DW Huff Consulting. It's a tax and small business consulting firm here in Chalmette. And you can learn more about my firm online. My website is huffconsulting.net. And I also have a Facebook page where I try to regularly post comments because these topics that we're going to discuss in a little while get kind of complicated as this updates pretty much daily, it seems like, with this sort of thing. But we have with us here Steve Kissee from Kissee and Company. Steve, want to tell us a little bit about your firm?
Hey, Dave. Yeah. So my name's Steve Kissee. I'm a member of the St. Bernard Chamber of Commerce. I can be reached at www.kisseeco.com, and you can email addresses on there. You can just send us any questions you may have relative to this podcast later, and we'd be happy to try and answer them for you. We're going to try and go over today, Dave, I guess some of the new issues that were brought up with the CARES Act 1 and CARES Act 2.
Yeah, and that's something. I mean, during the course of my day, I'm regularly getting questions. I mean, it seems like there's a lot of confusion. Things changed so much from last year this time to now. I just think how much it's evolved. But throughout the course of the day, we see a lot of misunderstanding because people may be working on stuff that was true in June, and now with the December passage of the new rules, some other things have changed, and I don't know. There's a lot of confusion, a lot of questions, but there's still some potential out there. We have some COVID relief measures, and some of them have turned out to be very, very valuable. So, Steve, you seen a lot of confusion with the people that you talk to on a regular basis?
Well, we're just kind of starting to get used to CARES Act 1, and we were able to relay a lot of that information to our clients, and they were starting to understand it. And then along comes CARES Act 2, which did change a lot of CARES Act 1 issues, especially as it relates to the PPP program as well as the ERC program. Mainly, I mean, one of the more important issues that we noticed with the CARES Act 2 is they now are allowing businesses who claimed PPP 1.0, I guess you would say, to also claim the ERC. Whereas in the past, you could not have both programs running at the same time. You couldn't have an employee retention credit as well as get a PPP loan. But now you can, and we've done that for several clients already, and it can essentially be effectuated entirely on the fourth quarter 941 for 2020, which many people should have filed by now, but you can go back and amend it to absorb those credits in.
And that's huge, Steve. That's actually one of the things I was going to say for later, but I think we need to talk about that. As far as the dollars that are involved, what I'm finding is that the employee retention credit, what I'm calling the ERTC for short, is huge. The first two that we've done have been 5-figure refunds for our clients. So it's huge, and it's carrying forward into 2021 as well. So that 50% credit amount that applied for last year that people can go back and amend their 941s and get money in their pocket right. Well, I don't know how fast IRS can send the refund checks out, but the money is available now, supposedly, right?
Right. And we've had a couple of clients who have actually received the refunds already, which I'm surprised it happened fairly quickly. I say within probably 2 weeks they got their refund. But I think the confusing issue with the ERC is that the qualifications to get it for 2020 to do it retroactively. There's different qualifications than there are for the first 2 quarters of 2021. But for 2020, the biggest issue that we see is there's 2 qualification possibilities. One is your business was either closed or partially closed by government mandate, or you experienced a 50% reduction in your revenues in a given quarter. Well, the 50% reduction in revenues issue is pretty easy to determine. It's the government closing or partial closing of your business. If your business is deemed an essential business, then the government closing mandate does not apply to you in most cases. I had seen some cases, and I've worked some cases where it actually did apply, but in most cases it does not. So if you're an essential business, like say a physician, then the government mandate qualifier will not work for you for the employee retention credit. So you would have to have experienced a 50% reduction in revenues for that to work. And of course, going forward with 2021, it's a whole different set of qualifiers. It's instead of a 50% reduction in revenue, I believe it's only 20% that's required, a 20%
Okay. Oh yeah, and it results in a 70% credit, so they can either reduce their tax deposits going forward and have more cash available. And and I've also had some issues with the related party rules too. So sometimes these smaller businesses that we deal with have some family members employed, and you got to know which wages are eligible, which employees you need to exclude from that calculation. So that's been so like everything else with this, it's not been a very straightforward answer. And sometimes when people see the news clip or the headline on some article somewhere, they think they're eligible, and you dig a little deeper, and some people are still eligible. Some people are being unpleasantly surprised by some of these little twists and turns here.
Yeah, the rules are ever evolving on this. As a matter of fact, just this morning I learned that owners of a business, their wages can qualify as long as the ownership is 50% or less of the business. Now, husband and wife, if they each own 50%, that does not qualify because they're grouped together. So yeah, that's something I just learned, today about the ERC.
And that blows me away, because it seems like when you look at these related party rules, where they were trying to exclude certain employees, I would think that the owner you wouldn't even have to say it that the owner is excluded. If you're trying to exclude the the kids and the wives and that sort of thing, it seems to me the owner would by default. But no, the way I saw in that same discussion, when you look at the letter of the law, the owner is not excluded, and so a lot of people are now taking that position that the owner's wages go on there, and then so the wife and kids can't, but the owner can, and
it's
and
bizarre,
and that. Yeah, and there's a lot of debate about that for a while, but I think it's been finalized, and nobody at the SBA, any government agencies, has come out and said, no, this is not how it's going to be. So it looks like, that's going to be a possibility. So,
yeah, no doubt.
Yeah, once again, it's just these things are evolving by the day, and as people are now, I guess, digging into these regulations and looking at them and kind of going through it now with a fine-tooth comb, we're finding in some cases more opportunities to get some money back in these business owners.
And I think one other thing I think we should mention is, like I said, you can now do the ERC in conjunction with the PPP, but when it comes time to applying for forgiveness for the PPP, you cannot use the same wages that you use to obtain the ERC.
Correct.
So that can get very tricky, assuming you don't have a lot of excess wages, let's say, to be able to easily get both. We tested some clients, and it looks like usually when their wages are around the $40,000 to $50,000 average per employee, it gets a little tricky, and you need to use that full 24-week period that you had for the PPP. So there's some calculations that need to be done, but just want to kind of bring that up that is out there, and clients, businesses can go back retroactively and try and claim this ERC, and it is, as you said, could be very lucrative.
Yeah. And it's very complicated spreadsheets too. The first couple ones we've looked at, the spreadsheets for excluding and not excluding. It's it's testing out your Excel skills here with tracking all this stuff, because there's no easy reports. None of the payroll systems are really set up to handle these reports like it needs to be when you're looking at that look back period. So it's decent amount of work involved in most cases. But I guess since we mentioned PPP a little bit, can you mention that? Talk a little bit about round 2 of PPP and what you're seeing as far as your client base on that one.
All right. So PPP 2.0 is officially, it's going to be a lot different in many respects from PPP 1.0, which many businesses took advantage of and received that. Mainly, I really don't think there's going to be a big rush to money this time, because there's an additional qualifier for PPP 2.0 where you actually have to show a reduction in revenues this time versus PPP 1.0, where you just had to make a claim that you feel your business was impacted by the uncertainty of COVID-19. You still have to make that claim, but you also have to be able to prove 25% reduction in revenues in any given quarter.
Right.
And that, for us, that's eliminated a lot of businesses from PPP 2.0.
Yeah, that's been my experience as well. I thought, looking back at how things went last year, I thought for sure everybody would easily show 25% or more of a reduction in revenue. But yeah, in some cases that wasn't the case for one reason or another. Somehow, some types of business still managed to do okay and stay kind of consistent. So I find, I think it's not going to be as many people on the second go round. But I guess the nice thing though about it is though, I guess the way they give you a benefit of the which year is higher basically. So if you do qualify, and there's a calculation that goes on, they give you 2.5 times your wages and that kind of thing. But they will give you the higher of whatever it was on round 2 or what they calculate for the same period in version 2. So yeah, so I guess you can't get any less than you got the first go round if you qualify.
Right. That's the case. The case with many of the ones that we've assisted clients with so far is 2019 wages we've been using for the most part, because in a lot of cases they have reduced wages in 2020 somewhat.
Right.
So PPP 2.0 in most cases is going to be the same loan amount that you received in PPP 1.0, except for restaurants, hotels, and tourism. There's an additional benefit to them with PPP 2.0, whereby you can receive an amount of 3.5 times your average monthly wages versus 2.5 times for all other businesses. So that's kind of nice for them because they were the most heavily impacted industries, I believe.
Yeah, I agree. It's definitely worse seeing a lot more carnage in the restaurant industry for sure. So they need every bit of help they can get. Good. That's good to know. And I guess going back to the other provision that was commonly used is the EIDL, that Economic Impact Disaster Loan. What's been your experience with clients qualifying for that? Did everybody benefit from that one as much as the others?
Right. So the EIDL, we had the loans, and then of course they had the grants attached to that too initially. As you remember, when businesses were applying for that at first, it was a situation where every business that applied would get a $10,000 grant, and then their loan. Right. Then it went down to $1,000 per employee. Then it went down to $1,000 because of the volume of activity, which is so huge that the SBA realized we're not going to be able to pull this off. So now, with the PPP being such a beneficial program, and people realize how much money they were getting out of it, we don't have nearly as many people wanting to apply for the EIDL. SBA loans anymore.
Okay, and we've seen a few people get it, and that's kind of interesting story. So the second version of the EIDL is when we talked about that the forgivable credit that was supposed to be $10,000 and it got reduced to the 1 per employee. Now there's a provision where they could try and get some businesses the full $10,000, and that's weird because it's one of the factors I looked at that is based on the being in a low income area. All right, so our business here in Chalmette, I typed in my address just out of curiosity. And turns out that I'm not in a low income area, which I don't know, whatever government agency took that, gathered that statistic, maybe it's true. But a buddy of mine, he's got a firm on Canal Street, much higher real estate values and, a lot more money on Canal Street than right here in Judge Perez. And, but somehow his business qualified and he received notification from the SBA that they're going to be contacting people who are within these zones and giving them instructions on how to apply for getting the remainder of that credit. I just blown away by how some people qualify and some people aren't, and it's
it's ever evolving. I'm sure you've read through the almost daily publications of SBA and Treasury Department and IRS question and answer sessions that they publish. And you literally learn something new every day on this.
Yeah, exactly. And I was looking at some timesheets from last year, and I found out there was big chunks of my day, when things were coming out fast and furious last year. I'm not exaggerating, that 4 or 5 hours a day was just reading stuff, and then, oh wait, this contradicts something I read somewhere else, and you're going back and forth. Even amongst the government agencies that are trying to provide regulations and clarification, it was still conflicting information, and so you find yourself talking to other practitioners and seeing what's really happening amongst other people who are applying. And yeah, it's been this has been more difficult than anything I think to keep up with.
And Dave, just a couple of little goodies that were thrown into the CARES Act 2.0. I'm not sure if you're going to get to these later or not, but I thought I'd just throw them in right now.
Yeah.
Is the ability of and it was with CARES Act 1 also, as a charitable contribution deduction for people who don't normally itemize their deductions. They can still take a $300 above the line deduction for charitable contributions in 2020. And I believe in 2021, they increased that amount to $600. So that's a little something extra that wasn't there before. As well, meals deductions, which is usually a 50% deduction amount. They're now allowing a 100% business deduction for business-related meals for 2021, not 2020, 2021.
Right.
So those are two.
So go out and spend some money at those restaurants we talked about before, because they need it. So,
the more infected industries, yeah. Mm-hmm.
Yeah, that's good to know. I'm seeing a lot of people qualifying for that now. My tax program says it reminds everybody to get, because now the people who weren't itemized would typically not even give you that information when you were talking about preparing tax returns. And now you got to ask that other question to make sure you get it. Because I think most everybody's given a couple $100 to some church or something along the way and never bothered to track it. So now we need to, I guess, make sure people are aware of it so they know to go back and look for those receipts and cancel checks or whatever it is, so you can document it and use it. Yeah. Sure. So I think that's about it. We have time for today, I think. So I guess I'd like to tell everybody to stay tuned. Chamber of Commerce website, we're going to try and post more updates in this information as it evolves going forward. Steve and I are available. I show up for these chamber events all the time, and we try to help everybody out that's a member every chance I get. So I'd like to encourage people who aren't already members to sign up and join and try to work together and help each other out here in St. Bernard, right?
Yeah, no doubt. And in summary, I'd just like to let people know that probably the most important thing of this whole discussion is they need to understand the retroactive treatment now of the ERC, the Employee Retention Credits, for the year of 2020. Because most businesses that applied for the PPP loan will probably very likely qualify for this ERC, and it's not a small credit. It can be a very large credit, and it is issued in a very timely fashion, it looks like, by the IRS within 2 to 3 weeks. And it has to be accomplished on the 941 for the fourth quarter of 2020, which you can go back and amend that.
Yeah, that's the one takeaway. I say look at that first before everything else. I think that's going to be where the big bucks are. So gotcha. And I was also looking at some other things going forward here. I noticed I have a little bit, like 30 minutes a week of free time every week, and I'm thinking about fishing. Versamax Slows, man. What's that? I'm seeing a fishing.
We're always coming out with new stuff, man. We got a couple of new courts coming out this spring. I'm excited about it, and I'm looking forward to getting back to the trade shows and all that stuff. It's pretty exciting.
Yeah, I'm looking at your stuff, man. It seems like there's good stuff. Well, that's about it. So I think we kind of covered everything that everybody needs to know. And once again, look at the questionnaire. So if we need to have a further discussion, there's a couple basic questions that'll point us in the right direction for whatever topics may benefit our small businesses. And hopefully we can get through this, and next year will be a normal year, hopefully, right?
Sure. Yeah. Fingers crossed.
Thank you for joining this episode of the Pulse of the Parish podcast. The audio recording is available on all major podcasting platforms. Links are available below. For more of our video recordings, the most recent upload is available here, or a video YouTube thinks you'll like is available here. We'll see you next time.